Hi guys, let's take a quick analysis on the dollar index and foreign currency. Remember that last week I emphasized that the dollar was bullish and we were anticipating to see price action trade into the drawn liquidity residing above that high. If you looked at that from a weekly perspective, you'd see that price action actually reacted of a bullish order block on the weekly time frame that we've been looking at from the previous week. If you've not been watching my analysis and commentary, I'll urge you to do that, and don't forget to subscribe to this channel so you stay updated every time I post a video. So we're looking at the dollar trading into the bullish order block right here, and from that point we were willing to see a reaction that will tell us to buy more, and we're buying into the drawn liquidity above that high, the old high there, and also the fair value gap above that high was the confirmation for the drawn liquidity. Then on the daily time frame, we're focusing on looking at market structure. Price has been forming higher highs, and we saw the dollar also reprice into a discount institutional reference point. The weekly bullish order block, the daily bullish order block was also a more confluent also at the bullish breaker right here. And you remember that I emphasized that we're looking to see price trade below the relative equal lows residing below the consecutive lows that were formed here. You see the first time price formed that low, the second one, and the third one. This is called diagonal liquidity. Price action will literally trade below that because retail traders are seeing this as a signal for a buy. Meanwhile, institutions would like to sweep the liquidity below that low and find a deeper institutional reference point to buy from. Alright, so we saw the dollar trade into the bullish order block, give us a more confirmatory signature to buy. The 3-candle price action with the middle candle having the lowest low. This is the swing low, and swing lows are usually price action reversal patterns. When we see them, it gives us more confidence to take a reversal in a certain direction. All right, then we go down to the 1-hour time frame to frame the trade setup. So on the 1-hour time frame, last week we actually took a buy sometime around, I think on Thursday. Yeah, price action gave us a signature to buy from. We had price action create shift on market structure bullish right there. You see that? That's the bullish breaker. Price traded into that vacuum block, the gap that was open during the last Monday, the new day opening gap. We said that we like to see price trade into 50% of that gap, and also the consequent encroachment of this fair value gap. This gap, the consequent encroachment is literally 50% of that gap. Also a confluence of a reclaimed bullish order block, previous bullish order block that was violated, but price action later came back to reclaim that bullish order block. You see that? So I had confluences of the reclaimed bullish order block, 50% of that vacuum gap. All right, and it's happening within the bullish breaker. Price traded into that level, and we saw that expansion into the first drawn liquidity for us last week was this old high. We said we want to see the dollar trade into that. So while we were buying the dollar, we were selling the euro USD, GBP USD, and all that. We were selling foreign currency and buying the dollar. So we ended last week at this price point. All right, right at the price point. I think I was having a session with my 101 students, and I mentioned that we already had another signature to buy the dollar more because the dollar created another signature for a buy. We saw the dollar created another bullish breaker right there. You see that? Price action swept the lows, created expansion higher. This is a bullish breaker, and I was even telling them that we would like to buy more should we see price trade into the bullish breaker between Monday and Tuesday. All right, little did I know that the dollar was going to come with a surprise, and all of a sudden we saw the dollar during the new week market open came in with a huge gap open higher. This is very massive. A lot of people who are selling the dollar because they don't know how to do proper top-down analysis and predict directional bias are going to cry because this will take all of their stop losses out. They're going to get taken out massively, and this is why we constantly emphasize sometimes you really don't need to be in a trade, especially when it's getting to the end of the day and end of the week. Most times close your trade and wait patiently for the next opportunity. Also, don't forget this is the first week of the month of February. It is NFP week, and during NFP week we like to stay of the chart, especially after the Wednesday New York session of the NFP week. You shouldn't be in a trade. You should let price action do what it wants to do. All right, so what am I even saying? So right now, what am I anticipating on the dollar? I literally would want to see the dollar reprice into internal range, possibly rebalance all of that gap opening. You know why? Retail traders have seen a signature to buy right now because they think, no, this is bullish. This guy is going to continue buying. But institutions know what they are doing. They induced all retail to go on a long. Guess what they are going to do? They are going to rebalance this inefficiency. This vacuum block needs to be rebalanced. So I'll rather wait patiently to see price action at least mitigate 50% of this vacuum gap. I would like to see price do that, mitigate 50% and find support at the previous resistance turn support, or even better, I would like to see it come back to the bullish breaker before I continue to buy the dollar and short foreign currency. All right, so this morning I think I gave a signal to buy Euro USD earlier this morning. Yeah, based on that, I gave a signal to buy Euro USD because I'm anticipating that the dollar is going to rebalance all of that inefficiency. So we're going to be buying the Euro USD into internal range. I would like to see the Euro USD also rebalance the inefficiency here. That liquidity void needs to be rebalanced for better price action on the Euro USD as well. Okay, my friends, this is what I'm anticipating on the dollar and Euro USD. There's really nothing much at the moment apart from these two things that I'm showing you. Don't never forget, it's NFP week. You don't have to go on a trade after the Wednesday session of the NFP week. Then today I want to encourage some of you, or if not all of you, to please go and follow our YouTube handle, the YouTube handle for the trading floor, because we're pulling out a lot of massive content on that YouTube channel. Carries Trading Institute. Carries Trading Institute is the YouTube handle for my trading floor, and man, the guys there are doing massive things, massive stuff. They're pulling out a lot of content, especially fundamentals, massive content. You see that YouTube handle, Carries Trading Institute. Carries Trading Institute. I need all of you to go and follow this YouTube handle so that you get to receive also a lot of educational content. You can see, especially this video. You should go and watch this video yesterday where we talked about the fundamental of what Trump did by increasing tariff on the US and also Canada. Just go and check what's going to happen, what we predicted and what happened after our prediction. All of the videos here are very powerful, very educational. Follow the YouTube handle, Carries Trading Institute. It's my trading floor. And I'll be coming live on this YouTube handle also. A lot of times once we get this YouTube channel to 1,000 subscribers, I'll be coming live to teach quite a lot of times. All right, that will be all for today. And if you want to join me on one-on-one mentorship, just check the link in the description of the video. Reach out to my personal assistant and sign up for my one-on-one mentorship for more precise trading course that's going to take you from zero to something. Even if you're a beginner trader, don't worry, reach out. If you're a trader, you've been trading ICT or smart money concept, but you don't have that level of proficiency to say that I'm profitable, you can reach out also. Let's up your trading, give you a more defined trading approach for you to become profitable in the year 2025. Until next time, wish you good luck, good trading. Stay